Hello, everyone. I'm covering today actually for another co-founder of Coinfirm, Pawel, but the real reason I'm here with you today is because in 2011 I read the white paper of Satoshi Nakamoto, and I realized that blockchain can be the basis of the future financial system if equipped with the proper anti-money laundering and compliance tools. So on today's presentation, I'm going to show you some of the challenges and solutions behind the anti-money laundering for cryptocurrencies and blockchain. So what are the threats and challenges? So cryptocurrencies and blockchain-based systems are not free from money laundering. They face the same types of risk like the traditional financial sector does. In case of crypto industry, in terms of the value, the number one is hacks and scams. So nowadays around 3 up to 4 million are stolen from exchanges each day. This is quite significant amounts. But in fact, there is plenty of other threats which are characteristic for traditional sector, and that's like, for example, terrorist financing is something that is present also in a crypto sphere, and companies who are obliged institutions running exchanges, wallets, and other companies needs to be aware of that there is such a significant risk in place. There is quite plenty of that. So there is a drug trade, weapon trade, human trafficking involved in that, tax evasion, so plenty of types of crimes. And then all these funds which derive from illicit activities needs to be laundered and layered somehow. What mechanisms are used to do so? So possibly most of you have heard that there are online services like mixers or tumblers which facilitate concealing the track of funds, or these are the services which join funds coming from legitimate and illegitimate sources to conceal the track of funds. But in fact, when criminals are trying to launder more significant amounts of money, they tend to use their own solutions because online mixing tools are not capable of handling millions and millions of dollars. So what they do, they typically design their own schemes of moving money through the chain of several hundreds of transactions, and they are disbursing the small amounts, and when these funds are passing through the thousands and thousands of transactions, they eventually need to be exchanged somehow, and the typical endpoints for these funds are exchanges, wallets, markets. And in fact, according to our recent study, Know Your Exchange report, this is the second release of this report that we're going to publish this month. 65% of exchanges do not have the complete KYC AML procedures in place. So effectively, they cannot see what funds are incoming to them, and they even don't know who their customers are, in fact. And also it's worth mentioning that those exchanges, wallets, which do not have the clear AML and KYC systems, they are much more often hacked or are being the subject of scams than the ones which does have proper protection. So In terms of challenges, the important part are regulations. So my predecessor speaking here were mentioning, so I will just quickly summarize. So from my perspective, one of the key challenges is the recent FATF regulation, for example, which requires that exchanges or so-called virtual asset service providers, as it's mentioned in recommendations, they need to pass the customer information from one to another when making the wire transfer. So this is the requirement that needs to be met by the mid of next year. Also, in terms of the regular anti-money laundering requirements, recently introduced fifth anti-money laundering directive requires that all assets that are listed on exchanges should be covered with transaction monitoring. So not only Bitcoin, Litecoin, but all tokens, all stable coins, there need to be the proper AML analytics behind. In terms of FATF travel rules, so this is quite challenging because, as you heard before, putting some data on blockchain requires some technological efforts to be done to be compliant with other regulations. For example, GDPR, right to forget. For example, it requires also to be integrated with the existing anti-money laundering systems. So when you're passing the information to another entity, you need to know before if the blockchain wallet belongs to the virtual asset service providers or not. So there is quite plenty of these challenges. I'm really happy to be here in Estonia because I learned a lot about the regulations in this country. So just for you to share this perspective. So Estonia was the first country in the European Union which actually introduced the clear regulations towards crypto, and it's also the country with the lowest AML money laundering index in the recent report of Basel Committee. So this is quite interesting, and the Estonia is actually leading in terms of the regulatory solutions, and can be the example for the other countries. And also in terms of the licensing, the 900 licenses, that is something that is amazing. So it's 900 licenses are being issued to cryptocurrencies industries, to cryptocurrencies companies so far. So you can see that this is moving on. In terms of how all these challenges can be met, so I will mention here just a couple of important aspects that need to be considered by entities which want to be compliant with anti-money laundering regulations. So first of all, it's important to be blockchain agnostic. So all assets that are traded, all deposits that are taken, regardless of the type of cryptocurrency, it needs to be covered with AML analytics. Otherwise, you expose your company for the regulatory crime and reputational risk. Also, in terms of the evaluation, it's very important that it must be something that is automated. Blockchain handles millions of transactions and without the fully automated solution, you would need to employ hundreds of investigators to do this properly. So the good solution should employ automated scenarios, automated risk detection, automated evidencing of the case, so that you can track all the transactions of your clients and, if necessary, report the suspicious activity report with the proper evidence. Also, it's important that you monitor all addresses of all your clients or deposits addresses. So it may be challenging because large exchanges, for example, they have even millions of deposit addresses, but the requirement is that all of them should be monitored in real time. All transactions should be considered, and all relevant risk on all of these wallets or addresses. Also, because it's very easy to make thousands of transactions, layering transactions through blockchain, the effective system must be capable of screening through the transaction tree, even in the distance of hundreds of hops between the evaluated address and the potential illicit addresses. So this is possible, for example, thanks to the graph technology, graph databases like YANUSDB or Neo4j, which enables the technological background for tracking transactions through the chain of actually unlimited number of transactions. Also, because most of the data is around crypto is cruising around internet and deep web, it is essential that the subjects that are active in this space share the data. So that the shared intelligence, the entities that provide the information about the suspicious addresses that register their own addresses to be exposed as legitimate, there need to be such mechanism. And this is something that we as Coinfirm also propose in our solutions. So another aspect is the audit trail. So whenever you make the AML investigation, AML checks, you need to prove before the regulators that it was done at a certain point of time, that certain checks was done, and that you fulfilled actually this requirements. So with blockchain, it would be a pity if you don't use this technology actually to register a fingerprint of your checks on blockchain itself. So the effective solution in this space should allow actually registering the fingerprints of checks, validating that it was done properly. Also, what we consider as one of the most important factors is that law enforcement is currently not very much effective in combating the crypto crime and investigating this. So I can say that less than 1, maybe 2% of stolen funds are ever recovered and returned to their owners. So that it's essential, and this is what we do. We are going to launch the service that can handle the claims from victims all around the world and investigate this both in terms of the technology, so where the funds has went, and also in terms of legal claims. So the multiple people can do the joint claim, and this is going to be investigated both in terms of legal and technological aspects. So this is, I think, all. So I'm happy to be here and support bringing the crypto and traditional finance together. Thank you.